Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A 4-foot bullish white soldier yesterday, but a strange one. You see, it was simultaneously both a key reversal up plus bullish engulfing pattern, and at the same time it could be seen as a possible indecisive spinning top as well. Strange one indeed. Anyway, the market significantly closed back up over the old November 2020 low at 116.02. Overall, we still seem to be within the breakdown from the recent cat's ears pattern formed over July to date period. In this particular instance, I've been taking the combination of the 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94 and also the neckline, currently 116.84, of the August to September head and shoulders top as the break-even area. Or break area if you really want. Last week's and the start of this week's action has been a recovery of sorts. Prices looked like they'd run out of steam by last Thursday, but there now seems more to this rally than originally inspired. Anyway, back to the cat's ears pattern. On this pattern we could see a potential move down to target X in the 114.5 area. The key will be maintaining the market below the break line, or lines in this case. All this comes in the shadow of last month's monthly key reversal down. Now looking more on the bigger picture, we are still nicely moving down in between the upper time, currently 117.87, and the middle time, currently 114.16 of the January to May bearish Andrews pitchfork, which has run the whole of 2021's action. So far today, stronger move up in a fairly free area. Now we're free above until that neckline at 116.84 and a significant 38.2% fib at 116.94. I note the now rapidly descending short medium moving average, currently 117.16, that is soon to enter the frame as well. Cable, aka sterling against the US dollar. A reactionary bearish harami yesterday, but only just. Actually, it wasn't that much of a reaction, as prices, whilst penetrating the declining short medium moving average, currently 137.25, still failed to close below it, choosing instead to close right on it. Unless something major happens, I'll now retire the late July to mid-September bearish Andrews pitchfork, as we've had two closes over it. The overall move up may soon be testing the next resistance level that is coming down to greet it, and that's the declining medium moving average, currently 138.05. Overall, we are still back within the broken recent sideways triangle formed from late July downtrend, currently at 138.59, and the mid-July uptrend, currently 136.59. This pullback up continues to threaten the targets below for the sideways triangle, namely an initial target X in the 134.90 area and a secondary target X1 in the 136.25 area. Sorry, 132.65 area. We'd previously managed to achieve target X, and as you'd expect, the secondary target is harder to reach, so perhaps that may be, well, have been enough indeed. We'll see. Finally, I have droned on internally about the longer term whole of the 2021 double top pattern Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the earlier significant move down had revitalized the idea enough that I had placed some potential targets for this pattern. Initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. With this move continuing higher, this big pattern is now also under threat. Beyond the declining medium moving average, we now have the flatlining long moving average, currently at 138.47. So far today, a move back up based on that short medium moving average, which is reaching up but not yet testing the falling medium moving average. Euro sterling. A reactionary bullish thrusting pattern type action yesterday as the market was seemingly not quite ready yet to tackle the support from the old upper channel line, currently 84.26 of the broken May to August bear channel. This somewhat unusual support has been enough to turn the market back up, at least for now. Interestingly, the market could not quite manage to reach up to the significant April low, 84.70. This capped yesterday's move. Overall, we still have the idea out there that the most recent pattern is a large right angle broadening formation formed since late May. The pattern is made up topside from the flat April 2020 low at 86.69 and below by the lower channel line, currently 83.31. However, we've stayed away from the lower channel line for quite some time, and I suspect this pattern may be morphing into something else. So far today, either side of yesterday's close, moving a little bit lower than that, and not enthusiastically trying to continue yesterday's move higher nor react lower really right now. US dollar against the Indian rupee. A second bullish white soldier yesterday, and what looks like it might be a possible bear spike as well. The market rose up, piercing once again the August 2020 high at 75.31, but failed to capitalize on the move higher, closing instead on the lesser Fibonacci level below at 75.19. This move up also negates the idea that the action from last Thursday until and including yesterday was a possible 3-day bullish morning star pattern. Nevertheless, overall, we're still above the downtrend and trendline combination of the April 2020 to date move, currently at 74.46, which makes up the large April 2020 to date sideways triangle. This still gives an initial topside target in the 76.36 area and a secondary target in the 77.79 area. Obviously, the secondary target will be harder to achieve. This, of course, makes a big assumption that the current break higher is not a false break. So far today, a testing move lower, but without a serious imperative. We've tested down below the next lesser Fibonacci level below at 74.91, but only just. And if anything, we are indeed looking at a possible bearish engulfing pattern right now. But this could easily turn into a more lightweight looking bearish double, or even not much at all. Not overly inspiring at this time in either direction. US dollar against the Brazilian real. An immediate countering bullish piercing line pattern type yesterday. The market was not happy about two things. Firstly, about moving lower to test the middle time, currently at 542.70 of the recent late July to late August bullish shift pitchfork that is running the current bullish incentive. Secondly, it was not happy about the possible bearish belt hold pattern created the day before yesterday. So, yesterday the market based itself unusually on the rising short moving average, currently at 546.68. Push prices back up, closing in between the two lesser Fibonacci levels of 550.12 and 552.91. Now further above, we still have the upper time, currently at 562.03 of the recent late July to late August bullish shift pitchfork. Meanwhile, below the middle time, we have two 50% Fibonacci levels of support, the May to June 2020 move at 539.28 and the 2021 move so far at 538.46. Please continue to keep a close eye on the bullish shift pitchfork as it has performed so well, especially the middle time. This pitchfork is the indicator for the gentle bullish incentive that has been evident here since the end of August. US dollar against the Mexican peso. A first reactionary move back up yesterday after the recent overt bearishness. An immediate countering bullish thrusting pattern. Not the biggest in the world, but still a reactionary move, though how much it is a true reaction, well, that can be disputed, as I suspect it to be looking and to be actually quite weak. You see, the move back up was seemingly based on the lesser Fibonacci level at 20.3382 and not much else. This does little to reduce the threat to the secondary target X1 in the 21-23.5 area for the June to date descending triangle pattern. That's above, obviously. Meanwhile, below we have the upper trend line of this broken descending triangle, currently at 20.1910, plus a mess of moving averages just below that. We're currently between 20.0912 and 20.1804. This is all in the shadow of last week's weekly key reversal down. So far today, a seeming resumption of the bearish initiative, but not managing to crack that low of yesterday, or to go much below the lesser Fibonacci line at 20.3382 as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimers posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.